of knowing your numbers, one of the biggest pitfalls for foreign investors going into the US is that they don't have a good grasp on the numbers. And it can be very hard when you're relying on others because people can throw jargon at you, and if you're a foreign investor and you don't understand them, then it's very easily to be led astray. If we just quickly run through what the key numbers are that you need to be across. First of all, you obviously have your purchase price. Now, depending on the state or the type of property that you've purchased, that will actually determine whether that's a single figure or maybe there's a couple of figures that make that up. This is the most straightforward part of our feasibility. In terms of repair or rehab costs, you know, especially if you're looking at vacant properties, you've bought in as-is condition, so there will be costs associated with getting that property ready for market. As I mentioned earlier, if you are getting involved in structural changes, then that can have a big impact on your return. You're going to have legals and searches. So these are all the costs that your attorney will charge you for basically making sure that you've covered all aspects associated with the property and the background checks. The title search is basically there to make sure there's no outstanding debts or nasty surprises, and the attorney will do those basic checks for you. Included here, you may have some local purchase taxes that are specifically related to the purchase of a property. And really, in terms of any other fees that you might get charged by an attorney, you might be charged for, you know, the actual act of doing the purchase for you, if they're setting you up any companies or other structures, and if they're going to act as your power of attorney or resident agent, what we'll get to later, then those will actually be all included in that cost as well. In terms of other closing costs, there can be some state-dependent taxes and things that you might need to be aware of. Effectively, the way that they describe state taxes is the same way that we talk about rates and land tax here in Australia. These are pretty easy to find out through the selling agent, and really you should just have your attorney confirm that that's actually correct. Depending on where you're buying can determine whether or not you get charged a higher rate of tax. So in a lot of states, there's a resident rate charged for taxes and a non-resident rate. And for example, in Michigan, they're described as homestead and non-homestead. So the difference is simply that they make it cheaper for you if you live there, and they make it more expensive for you if you're investing as an overseas investor. It's really important, I think, to kind of get a feel for how these rates and taxes might vary across the city. I wouldn't hang my hat on it, but sometimes they can be an indication of a property value. So higher taxes can sometimes indicate a higher property value. Now, depending on where you're based as well and whether or not you feel your taxes are reasonable, you can actually work with your attorney to petition to have these reduced. Again, understand how they vary across the city and make sure that aligns with your initial research about the areas that you're looking to invest in. Property insurance, we've already covered. The main issue here is you're making sure you cover against vandalism, fire and third-party liability. It is ongoing, so you want to treat it as an annual expense. Again, you're using your insurance brokers to work with you to make sure you get the best deal. And you always want to make sure that the quote that you get for insurance is actually comprehensive. In terms of current market value, this is probably the trickiest number that you'll have in your feasibility. There's two kinds of ways that you could describe your value of your property. One is a state-derived valuation, and the other is the last sales price. Now, depending on what state you're actually purchasing in, the way or the method and the formulas for deriving the state valuation can sometimes be outdated. You know, and you'd have to look into that. But really, in my mind, the most accurate way of understanding the value of the property that you're purchasing is to look at last sales. And especially if those previous sales were in the last 2 to 3 years, then that can be a pretty good indication of where you would expect the market to recover to in the next 3, 5, 10 years. Sometimes the state will use a city or property assessor to ensure consistency. So they'll come up with some formula and some way of deriving what they believe to be the value of the property. But as I said, a lot of those sorts of systems are actually outdated now. The other thing to bear in mind is that that way or that method of valuing properties can vary massively from state to state. So we talked a little bit about this earlier, but you know, if the person that you're buying through does have a property management arm, they can give you a pretty accurate estimate of what the income for a particular property will be. Again, I would always be looking to corroborate that with at least 2 other sources, and you can do that fairly easily, either over the internet or by calling a couple of real estate agents. Yeah, as I said, you can ring other property managers. Borrowing costs. Now, if you are borrowing money here in Australia, then you do need to account for that in your feasibility. And there's actually a space on the bottom half of that feasibility calculator to put that in. Now, for simplicity's sake, when I've been talking about property, I've often been assuming that there have been no borrowing costs, because predominantly people going into the US market have been buying out of cash reserves and superannuation. But if you are either working with someone in the form of a joint venture, or you're working with people who are going to charge you interest, then you do need to account for that on your feasibility. The earnest money deposit is simply the description for the money that you would put down on a property to hold or secure that property. It generally accompanies a purchase agreement, and at that point when you sign the purchase agreement, if you then change your mind or can't settle, then you're at risk of losing that deposit. Generally, these monies are held in a trust account, and on the day that you decide to settle on that, that's when it's released to the person who's selling. It's also known as a good faith deposit. So yeah, as I mentioned, if you default after you've signed, you've pretty much lost your deposit. Yield. For those of you who aren't aware, yield is simply the description that we use to describe how much income a property generates for us. Now, generally speaking, yield is reflected as a percentage of the total outlay of the property. So when we're talking about gross yield, we're saying how much income will we get divided by the total cost of that property. But when we're talking about net yield, I've said gross yield there, by the way. If we're talking about net yield, we're really saying after we account for all of our expenses, how much income will we get as a percentage of our initial outlay.